Welcome to Crypto in America Live, the only show bringing you candid conversations on the biggest news stories, legal issues, and policy developments shaping the crypto world. Every Friday at 12:30 Eastern. We're back, the three of us.
We're back in the chairs. Yeah.
Yeah.
Good to be back. Happy Friday.
Yeah. Our usual backdrops are back.
Yeah. Let's do a little recap. I mean, where were we the past 2 weeks? Jacqueline and I were in Hong Kong. Yes. Gerald, unfortunately,
New York.
Didn't make it. We missed you. But then we all convened in Denver last week for ETH Denver, where we did a few episodes. And now we're all back in our respective chairs. I'm in Jersey, Jacqueline's in New York, and Gerald's in DC.
Back in DC. And I thought we had all missed the classic ETH Denver bug, but, maybe not the case. We'll see.
Yeah. I also want to give Gerald a lot of credit because he was in New York last night for a dinner that we had. And now he's back in DC. And that's just
I'm back.
Impressive. He time travels for sure.
It's a short trip. It's not bad. Yeah.
I know, but still
up and down.
Kudos.
I think I got to do what you do, Gerald, because I come to DC a lot now, and it's an hour plane ride, right? And I think it's a 3.5-hour Amtrak. So like weighing the opportunity there, like an hour plane, 3-hour train, I don't know.
Yeah. So at this point, I think we could do a whole segment on the benefits of like Amtrak versus flying DCA to LaGuardia versus the Amtrak. It's like, I don't know. I just love getting up in the air and getting back down, and like into LaGuardia, it's not that bad. Like the Amtrak, I know people who like to like work on the Amtrak and all that kind of stuff, but I don't know. I'm a Delta guy.
I imagine a lot of the guests that come on the show too do the DC to New York track as well and probably have strong opinions. Maybe that's the first question we start asking guests instead of what does crypto in America mean to you? Do you prefer
plane or train?
Plane
or train. Yeah.
We can ask our guests today. Well, we're starting off with Shane Molidor, CEO and founder of Forge. He's going to come on to talk about the alleged insider trading allegations against Jane Street, the high-frequency trading firm. We have Amanda Tuminelli, the executive director and chief legal officer of the DeFi Education Fund. She's going to come on to talk all things DeFi on Capitol Hill, where the fight for including protections for software developers is, and a new bill that was introduced in the House this week on that very subject. And finally, we'll have Collin McCune. He's the head of government affairs at Andreessen Horowitz. He's going to give us the latest on the Clarity Act and where those stablecoin yield talks are as of today. But first, as always, we'll get into the headlines of the week. We'll start with the SEC's new appointee. I thought this was an interesting one. They've gone and picked someone straight from industry, Taylor Lindman. He's the former deputy general counsel of Chainlink, and he's taking over the role that Mike Selig actually vacated, the chief counsel to the crypto task force. And yeah, he's in the role now. Hester gave him a nice shout out. Hester Peirce gave him a nice shout out on X earlier this week. And he's going to be taking over that role. And pretty cool that they're plucking straight from industry. I mean, it makes sense, right? It's someone who's very knowledgeable about the space to head up the crypto task force, probably not really a surprise.
Yeah. So first of all, congrats to Taylor. He's a friend. I'm sure he's not busy at all. I know they're pretty chill over there at the task force right now. So obviously inheriting like a huge agenda. Also, I will say one thing he has in common with Mike is Perkins Coie alum. They were at the same firm like earlier in their careers. So maybe there's something to that. A lot of white collar securities work there. But yeah,
Perkins.
Say it again.
I didn't know Mike Selig was at Perkins Coie.
Yeah. So little through line, keeping it in the family there. But and then great to see somebody pulled out. Kind of I think it's a great opportunity for Taylor. Obviously, other friend Ben Sherwin. I'm sure he'll have to fill that seat. GC at Chainlink, looking to replace obviously a powerhouse in Taylor. But it's exciting news for the industry.
Yeah, it's definitely big, and it's good to see more of these major crypto players, entering more of these government agencies to kind of help lay the land as well. I'm also cracking up that we put the ticker for Chainlink on the headlines here.
Yeah, there you go. Hopefully it doesn't move it.
Yeah, this isn't an endorsement, whatever. But yeah.
No, I did that because I didn't want it to just say link exec, because it's like, for
Chainlink, the token.
Chainlink.
It's okay.
Link Army. I hope you guys enjoy that one. Yeah.
Because link's word, right? Just differentiating that it's Chainlink.
Sure.
Chainlink is too long for the title. Okay, you know what? Talk to our producer about that.
No, it's exciting. And I think also just, again, going back to the agenda they have on their plate, like that was a seat that you needed somebody in, ASAP. And I know C-Lig is building out the staff over at the CFTC, and they're kind of short on enforcement folks right now. So yeah, good to just see like the agencies keep up that capability, and also obviously to have somebody who's been in the industry, I think is great. You want people who are familiar with the material they're discussing. So it was a good pickup.
Yeah. All right, let's get to my favorite story of the week, only because it's been the ripple effects of this story have been quite funny, in my opinion. The White House shutting the door on the possibility of a pardon for Sam Bankman-Fried, who honestly has been not so subtly begging for a pardon on crypto Twitter these past couple of months. But I think we all saw Senator Cynthia Lummis's response to something that SBF tweeted. He tweeted about the Clarity Act, and she had a spicy response. Someone's looking for a pardon and doesn't realize the Clarity Act would have you locked up for much longer than 25 years. My legislation couldn't be more different than the bill you tried to buy from Congress over my objection in 2022. We do not need nor want your support.
Oh my gosh.
And the follow-up tweet to that, Stephen Ehrlich, who I believe likes to report a murder. Stephen was the former editor of Unchained. Am I right in saying that? That's right.
Yeah. He was at Unchained, now he's at SharpLink. But I mean, this is my kind of reaction every time I see SBF on the feed. I'm like, damn, this is just a cockroach that will not die, And also it's like, just pack it in. I think he's just like circling in his jail cell, can't let it go. And obviously, he's like, yeah, whatever.
Everyone else is
like, you're someone that posts on his behalf, right? But like, take it away. Give this man a book or a journal. Like, Twitter is not the answer anymore, and I think everyone feels the same way. Like everyone's like a no.
Contact and being like, hey, this is my thought today, and I need you to post this word for word on my Twitter account.
100%.
Yeah, I don't know. That's a great question. I think like it is, to Jackie, to your point, like I think the industry just breathed like a collective sigh of relief that this wasn't really on the table. Right. I know he had been like also promoting a bunch of sort of the president's agenda, kind of trying to say that, he was a big fan and supporter. It seems heavy-handed is not the right word. Like sloppy is not the right word either. Like there's a very clumsy approach to like trying to get a pardon. I think also both of his parents are still employed at Stanford. So rumor is they've been kind of behind the scenes trying to work on this as well. It's one of those, I think, just seeing all the pardons that were given to crypto execs, whether it was CZ or Ross or any of these other guys, like it wasn't unfathomable that this administration would give a pardon. I do wonder how much his like sort of public donations to the other side of the aisle may have hurt him, just in like this specific instance. But yeah, it's good. Like it would be great if we could just like this saga of like will he or won't he just like comes to an end. Like that would be great.
I think he's still going to keep going.
I mean,
I don't think he'll ever stop.
He's got free time.
Yeah, so. Lots of free time.
He's got a lot of time to keep going. Yeah.
Yeah.
There was at least last month, right? Or was it earlier this month? Because she served a certain amount of time. It wasn't long. It was like less than.
Oh yeah, she is out. Yeah. So yeah, who knows?
She got out
in the next chapter of her book. Maybe she'll write a book. But
really. She got out last month. I just looked it up. 24 months in prison. Sure.
Yeah.
Yeah. What's the setting? She writes a book and starts doing the cable news tour and on Good Morning America, and I could totally see it.
Maybe Crypto in America. Maybe we'll have her on and ask for her side of things. Maybe that would be interesting.
Well, she unlike Sam did the media tour. She did not talk to any press, I believe.
No.
I don't think
she disappeared until the court, and she spoke.
She was cooperating, so there wasn't a whole lot that she could probably say off the record. So yeah.
The invite's open.
Yeah.
If you're watching, Caroline.
Yeah. There you go.
Well, stable coins are of the moment, as we know, obviously, and Meta seems to be getting back into the space. This is a CoinDesk story, so we'll see if this comes to fruition. But they're saying that Meta is looking to get back into the stablecoin scene in the second half of this year with a possible third-party payment integration and a new wallet. And this would obviously follow the failed Libra project, which I think it abandoned in 2022. This is interesting because I thought that with the Genius Act signing, there was general pushback, and I think like maybe even like in the text, like not a ban, but maybe even a ban, right? To companies like Facebook, like Amazon, like X, putting out their own stablecoin, right? Like I think it's only reserved for like financial companies being able to do this. And what I learned is that if they are going to do this, there would have to be a unanimous vote of the Stablecoin Certification Review Committee. There is that review committee apparently that exists, which is made up of the Fed chair, the Treasury Secretary, and the FDIC. So essentially they would have to get permission in order to do this, which I don't know if that would be like difficult, if they would, give permission, but it would have to be like an entire process. But I just thought that that was interesting because that was like a big fear of, I think, some of the Democrats and why they were willing to say no. And I think Josh Hawley, Republican senator, was one of the reasons he said no to voting for the Genius Act, was like he was worried about big tech taking advantage of the Genius Act and launching these things, right? So it's just interesting that now this Meta's trying to push into the space again.
Yeah, and so I was digging into this a little bit. So Q4 2025 Meta process, I think it was around like 5.3 billion in payments. So they have a ton of payments volume, but this to me, like they're not going to issue a stable coin. I think they still have a lot of scar tissue from the Diem project, the Libra project. So potentially integrating with like USDC or USDT, even like outside the US. That to me makes a lot of sense and is potentially bullish for like broader stablecoin adoption if you're processing all those payments on stablecoin rails. But I don't think they're going to try to directly issue anything. So
I don't know if that's true, Gerald, because they sent out an RFP apparently to third-party firms to start their own stablecoin. Like maybe they do have that scar tissue, like you mentioned, but it sounds like they want to do their own the way we saw, other firms like I guess what Stripe is doing their own thing with Bridge and Privy and Tempo. Like they have the whole stack there. I think they also put Stripe in as one of the candidates, according to the article.
Right. So that would be like third-party issuers, like integration. If they do want to do their own issuance.
Yeah.
If they do want to do their own issuance, I think that would be like a massive headache for them versus like USDC integrating with like Shopify. Right. Yeah. Like that's probably much more like at least from like a regulatory hangover path, like that would be way easier for them to do.
A lot of the conversations I've been having recently on the front of the stablecoin kind of narrative, so to speak, is like, do we use USDC or USDT, which are the largest ones, as we know, by market cap, or do we create our own stablecoin? And I think a lot of these like fintechs, consumer apps, et cetera, want to create their own stablecoin because they want to like reap the benefits of the yield.
Capture the yield.
Yeah, exactly. Whereas like that's not the case if you use the others, but I don't know. I guess we'll see. I also like don't really know what the point of like Meta stablecoin would be. Would it be kind of for like a creator economy on Instagram, and you could like tip people? Maybe.
Well, Facebook is way more than like a creator marketplace now, right? Like it's like ads, it's payments, it's like there's Facebook Marketplace, like a huge business that like 5.5 billion in payments. I'm sure it's going to grow this year. So I think they're just trying to run things like on stablecoin rails. And we've seen X put out, and it'll be really interesting to see what Elon ends up doing with this, because he keeps like hinting at the idea that X could integrate a stablecoin too. And I don't know, it seems like a huge headache, especially with how many like white label stablecoin as a service platforms there are now. It seems like a huge headache to do your own when you can just go to like a custodian and integrate a third party one and still capture fees based on like payment volume rather than just trying to capture the yield, right? Like it seems like a much easier business model to me. But
I also wonder, do you think this is like maybe overblown? Like everyone chasing the stablecoin narrative right now and wanting to integrate stablecoins, like is it unnecessary, or is this actually the future of things?
I mean, as from where I sit, from where I
had like the whole, we're all gonna launch these like NFTs, and like NFTs, stablecoins, they're not the same. It's not comparable, but like it kind of reminds me of like every time there is like this new narrative or angle within crypto, everyone chases it, and then only a few really kind of like stay in the washout.
Yeah, I mean, I think going back to like what we saw at ETH Denver, right? Like agentic commerce is coming, it's here. There's like I know X402 has been a huge deal. There's been a bunch of projects that are trying to integrate that. That's like the basically like native sort of agentic payment rails. And there's an argument that you kind of need crypto rails to manage the volume and like speed of a lot of these like transactions. If you have like bots doing business with each other, that's again probably a whole segment in and of itself, but. It's like I think Meta swung and missed on the metaverse. Still haven't changed the name back, right? And they've gone through these cycles where it's like VR or like, I remember when Zuck did his thing with his avatar and it looked like a like Wii character. And you're like, really? Like you put like 30 billion into this, and this is what it looks like because you got like stick figures, but yeah, we'll see how it goes. I don't know. I'm sure there's some smart folks over there trying to do something, but I guess long term, like I do think stablecoins are truly the only product in crypto that has like actual product market fit, right? Whether it's remittances, and obviously Facebook is also incredibly global company. So I think you could see like a lot of cross-border commerce. It's easier to settle in stables. So we'll see how it goes.
Yeah, I feel like we should highlight Circle's earnings too. They had
a
Gerald likes that fire earnings.
Yeah, literally. I was saying that in our chat this morning for the listeners who don't know how the show works. We pick out the news of the week, and I was like, oh yeah, what about Circle's earnings? I mean, they beat estimates, right?
They circulation hit 75 billion, up 72% year over year, nearly double their own 40% guidance. Transaction volume hit 11 trillion, up 247%. And I think this just all goes to the conversation we were just having about the stablecoin boom, right? This is all on the back of the Genius Act signing and this stablecoin economy really taking off this year.
Yeah, and I think there's a conversation that we're not having, which is like, how does USAT end up jumping in this like market share with their like Genius compliant stablecoin? I know they're super early on the issuance side and looking to integrate with a lot of folks. So obviously like Circle is way out ahead in the US. Yeah, the revenue, I think to your point, like everything, it's crazy to see a company that literally just does money, up 77% year on year, with revenues, but it's it's a big big jump for them. And then the crazy thing is too, like I was thinking about the share price and that kind of stuff and the volatility that we're seeing in the market. Like there's nothing linear that's happening right now, right? Like it's like you have these stocks that are going up like 20-30% on news. I know like Netflix, this is like a tangent, but Netflix's shares I think jumped 10% when they backed out of the Warner deal. So like the market is just, I think, like trying to figure itself out right now. But good news for Circle.
Yeah. Way to go, Circle.
Well, our last story is Jane Street, but we're also going to get into this topic with our first guest of the day, who is Shane Molidor. He is the CEO and founder of Forged, a blockchain capital markets advisory firm that provides data and insights on market makers to help token projects. And we're going to talk to him about the controversy over Jane Street allegedly engaging in insider trading. That is according to the administrator in charge of winding down the Terraform Labs affairs. He basically, long story short, sued the high frequency trading firm this week and its co-founder and two of its employees, alleging that the firm helped accelerate Terra Luna's 2022 collapse through insider trading. So we want to get his take on all of this stuff this week. And Shane, welcome to the show. Excited to have you.
Thanks for having me. Excited to be here.
Welcome.
Yeah, maybe at a high level to start off, Shane, what is kind of your takeaway from the Jane Street controversy, so to speak, that's happening?
Yeah, absolutely. I think in review of the complaint, sort of two key themes arise. The first is, are Jane Street's actions actually, were they informed by material non-public information, or were they informed based on portfolio management and risk mitigation? The second, and I think the unspoken connotations or implications of this complaint are, were the actions of Jane Street intended to harm and ultimately catalyze this death spiral of the Terra Luna ecosystem, Or was the market impact and subsequent price depreciation and collapse of the ecosystem an unintended consequence of portfolio management? And I think really digging into those two questions allows you to get to the root of the complaint. Unfortunately, so much is redacted from the complaint, so it leaves a lot to the imagination. But yeah, a lot to dig into regardless.
Yeah. So Shane, I'm curious about that nuance that you mentioned on like taking advantage of material non-public information from your perspective, because there's been a lot of speculation. I know Jump, got involved in this conversation kind of earlier on, just on who was sort of responsible. It seems to me like there's part of it is I know the counter argument as well, like we knew the tech was faulty, and like you could even go to like on-chain analytics and look at like wallets moving funds, and if you're fast enough in this kind of world, maybe you take advantage of just something you see on chain, versus the element of like sort of active coordination that I think is implied here. And then the word insider trading, we were talking before we started recording, is like maybe a misnomer. You have to make a lot of assumptions to allege actual insider trading. But how do you think about sort of, with what your company does and the lack of transparency that a lot of retail investors have on the market making side? How do you think about just this is the data available to the public, and there are just people who are smarter and faster than others who take action because that's their job, versus sort of like active coordination between some of these parties?
Yeah, it's a good question. I think with the actions of Jane Street, it was, the sell-off of 85 mil UST within, I believe it was 8 minutes of Terraform's withdrawal of 150 mil UST from the Curve 3 pool. Now, it wasn't publicly disclosed that withdrawal was from Terraform. However, I think a savvy institution, especially one with significant exposure, is certainly keeping abreast of on-chain analytics, and that sort of withdrawal of assets to such a significant pool that was meant to protect the peg, I think draws into question, they're a rational actor. They're looking to maximize, their return on investment. Therefore, it's reasonable that they could have simply taken action and sold off that UST. I think to your point about, how do we create a more democratic landscape where there is transparent and free access to information? It's not good enough to just have these tools that allow you to track on-chain transfers, because I think with unsophisticated retail, it's not so much access to information. It's how do we disseminate that information into digestible sound bites, and how do we take it a step further and actually induce some sort of action to be taken by the investing public? And I think that's a big gap between kind of Web3 and traditional finances. In traditional finance, we've got talking heads on MSNBC that are telling us how to act, how to manage our portfolio in response to different disclosures or evolution or deterioration of underlying fundamentals. And no such market exists, or no such industry really exists to the mature state in Web3. And it's further exacerbated based on 24/7 continuous price discovery, oftentimes for very immature assets where fundamentals are maybe non-existent or less apparent. So I think a lot of what Forged is trying to do is democratize access to that information. We're starting with the blockchain founders and empowering them with very savvy tools to navigate token launch and post-TGE optimization. And sort of our hidden agenda is that if we give them fantastic tools to better navigate there, eventually we will mandate certain public disclosures, such as which market makers are you working with? What is the depth of liquidity and their trade activity that is being conducted in the market, so retail can disseminate between organic and subsidized activity? What are the terms that you paid for certain exchange listings? Transparent access to tokenomics and inflationary tendencies. All of these things that are previously a black box. I think it starts with empowering the founder and then sort of peer pressuring them to make these public disclosures so that we can become closer to the TradFi equivalents.
Mm-hmm.
Yeah.
Yep.
So, sorry, go ahead, Eve.
No. I was just going to say we should also point out, and I was going to mention this in the intro, but Jane Street has denied the claims, and they said that they plan to defend themselves against these claims, but they said that the collapse was also the result of a multi-billion-dollar fraud. I was just wondering, Shane, if you had any thoughts on, what prompted this from the Terraform side. I mean, we've kind of seen the whole court case play out. Obviously, Do Kwon is going to jail. This seems sort of maybe from an untrained observer, someone who hasn't really been following the case, or maybe if you have been following the case, it seems like it kind of came out of left field, right? I mean, do you think this is sort of like a last ditch attempt by Terraform to kind of like pin the blame on someone else, or how do you kind of see this this allegation, I guess, coming out of maybe left field, as some people would say?
Sure. I see it less of scapegoating and trying to place the blame, and rather it's coming from a position of maximizing potential returns from an estate that has a fiduciary obligation to creditors that were negatively impacted. And if you're looking to maximize returns on the bankruptcy estate, it makes logical sense to go after high profile quantitative trading institutions that have historically generated significant profit across the Web3 ecosystem and outside of the Web3 ecosystem. Therefore, Jane Street makes logical sense, especially given their involvement. And certainly Bryce's secret chat doesn't look good in a complaint when it comes to material non-public information. I do think there's an important distinguishing factor between the role of Jump Trading and the role of Jane Street. Jane Street is alleged to have attacked the peg based on material non-public information and catalyzed the death spiral. However, my understanding based on the complaint is that they're not being viewed the same as Jump, as making material representations to the investing public that could be perceived as fraudulent. So again, if you're a rational actor looking to maximize returns on the bankruptcy estate, certainly you're going to go after the biggest players with the deepest pockets in the room. I think it has less to do with that, or more to do with that than scapegoating.
Yeah. Shane, in general, after all of this, how do you kind of see this shaking out for other market makers and the movement of the market going forward? Obviously, you've talked a lot about transparency, and that's an important factor in this, right? But maybe that'll become a key point in the future?
Sure. I think it comes down to sort of this this mantra that I've always been told from my mentors in the space. When I started in Web3 in 2015, working with the Winklevoss twins, they'd always said, hold yourself to a higher standard, ask permission rather than forgiveness. And I think what's become very clear is that anything that you say in a non-public forum is eventually subject to discovery. And whether or not people believe that these are unregulated assets, I think you need to hold yourself to a higher standard. There will be retroactive retribution for wrongdoing. And never take any sort of action that you wouldn't feel comfortable standing by sitting across the table from a 3-letter agency. And so I think more transparency to engagements as both an investor, a proprietary trader, or maybe an affiliated market maker with a project is definitely going to become the industry standard moving forward.
Yeah, Shane, I want to dig into what you guys are trying to do around sort of market maker transparency and like your thoughts on kind of tokenomics as they work today in general, right? Because what we haven't really talked about is how thinly liquid so many of these markets are for new projects when they start. And so it's a big kind of just part of the industry that a lot of the initial liquidity is, I'll just call it inorganic. Do you think that greater transparency or a change in the way projects launch tokens, like what's the end result that you see in, like, if I see that a project has great relationships with, let's call it like the top 5 market makers, and I know there's a bunch of liquidity on chain, maybe that's good for me as a retail investor hopping into that project because I know that that liquidity is going to be around for a while. But then I also know that that demand is being driven by people, as you mentioned, with like institutional and financial incentives who may not necessarily be aligned with like me as a trader, right? So how do you think greater transparency around the market making space will impact how projects launch tokens and deal with that in a like retail facing way in the future?
Sure. I think the end state is granting more confidence to the speculative investing public. Right now, I think that there is a lot of distrust within the ecosystem after so many rug pulls, so many, black box operating with, VCs with privileged access to insider information. And what is the investing public craving the most is transparency into the inner workings. Right? If they want to buy into a new high risk asset, they want to do so with confidence that they're not going to get screwed over. So to your point about providing transparency about subsidized versus organic liquidity, let's be clear, that's not synonymous with subsidized demand. Traditional companies spend a lot of time during a roadshow building up to an IPO in a book building process. Book building is supposed to build both liquidity, so patient buyers and patient sellers, as well as sustained institutional demand. So transparency on market maker activity just provides more clarity on who are the patient buyers and who are the patient willing sellers. And seeing that liquidity is largely subsidized from relationships with market makers can give you confidence that that liquidity could be more resilient. Now, it's not necessarily a bullish signal if a majority of liquidity is subsidized in terms of the presence of other organic, sophisticated traders, but that doesn't mean that there's not demand for the asset. Again, I think that transparency could catalyze more speculative demand because there's a degree of confidence that someone that buys in isn't going to be a bag holder, buying a large amount of the asset, but then unable to exit that position at a fair and efficient price because of market impact and slippage. So it's all about transparency to empower the less sophisticated investors to make more informed decisions.
Shane, the Bitcoin community is also piling on to Jane Street this week. They're saying that there's evidence that Jane Street is also suppressing the price of Bitcoin. There's a trend, they say, that there's a 10 a.m. selling, I think, is the narrative. They sell at 10 a.m. and that's why Bitcoin's price has been down this year. What do you make of this?
Again, it comes back to intent. I look back to 2013, Don Wilson, DRW, CFTC, allegations of market manipulation based on, I think, bid side stabilization during a close in a commodities swap. And ultimately what it comes down to is Jane Street taking these actions because their intent is to suppress the price of Bitcoin? So selling large amounts or taking large short positions with the intent to depreciate the price? Or is this just part of standard proprietary trading, risk management, and portfolio management? And again, show me the intent. And if you can point to clear intent, then sure, I think the backlash would be warranted. But I think that the crypto community has a tendency to pile on a sacrificial lamb or a scapegoat when the market isn't going in their direction. And right now, everyone's down pretty bad in the last 4 months. So it doesn't surprise me that allegations of insider trading, then the on-chain sleuths get to work and they say, hey, we're only in a bear market because of this bad actor.
Shane, really appreciate the perspectives. Before we let you go, I have one more question because there's a really interesting sort of comparison being made. Like in the current version of market structure, there's the ancillary asset and the network token test, which I think a lot of these new projects would probably fall under. And there's a disclosure requirement from the SEC. You brought up the idea of both kind of the material non-public information that VCs have in private companies, and then also sort of the aspect of a roadshow for like an SEC registered, sort of IPO. Where do you think is like the right amount of disclosure, given that a lot of these projects are probably going to end up being treated more like commodities and not necessarily having the same kind of treatment as like a public stock would?
It's a good question, just because like when it comes down to it, crypto is unique, and it's always been unique given that you're the equivalent of a publicly traded company, but you're also at a pre-seed level. You haven't reached a maturity in terms of your fundamentals that is akin to a publicly traded company. And so I think that it's a delicate balance wherein, there are certain activities that are essential to a pre-TGE project in terms of engagements with sophisticated institutions, and certain insights that these institutions glean. And we don't want to indicate that everything is material non-public, because then I think that detracts from potential participation in either the secondary market as a buyer when we need that sort of sustained demand post-TGE, or in other sort of activities that could support the ecosystem. I'm not sure, I guess, is my short response. I know that the crypto community is clamoring and very eager for more regulatory certainty in terms of the regulatory status of these assets, both pre-TGE and post-TGE, so that we can clearly define a framework and then be able to better navigate that versus the legacy means of doing things, which is, enforcement by action or, regulation by enforcement.
Yeah. No, really appreciate it. We'll have to see how this unfolds and have you come back and talk about it. But thanks for the time today. Appreciate it.
Thanks, Shane.
Absolutely. Thanks for having me.
Yeah.
Great perspective. I feel like we don't talk about like trading and markets that much on this show, but we should do that more. It's really interesting.
Never too late.
It's never too late.
Literally.
Something we do talk a lot about on this show is policy. And Amanda Tuminelli is the executive director and chief legal officer at the DeFi Education Fund, one of crypto's leading advocacy groups. And we're going to bring her in now. Amanda, it's been a while since we had you on, but welcome back to the show. Happy to see you.
Amanda.
Happy to be back. Thanks for having me.
Yeah, it's been a while, like I said, but why don't you give us a rundown? We got a bill to talk about, which we'll get to, but kind of give us the temperature check on how the DeFi community is feeling about the Clarity Act and the progress on the Hill in regards to getting these protections for software developers, and just give us the latest.
Yeah, happy to. I think that DeFi has taken a bit of a backseat to the overall yield conversation that's happening on market structure right now, which is not a bad thing. I actually think it's a good thing. There's a short list, but a list of open items that need to still be worked out before market structure can be finalized in the Senate. But we are all here at the table, happy to work on it and happy to be working with the banking and agriculture committees on the bill. I think overall, things are moving. It does feel like things are happening, and it feels like issues are being closed out. But I think, like I said, DeFi has just been waiting for the yield issue to get solved.
Mm-hmm. I also want to talk about Section 1960, which is about protecting software developers from being prosecuted under the criminal code. Are you kind of hopeful that this might positively impact Mark Warner's and Catherine Cortez Mastro's views on the section? Kind of where do you stand on this?
So I think overall what we want is for software developers to be treated as they should be, as people who are not actually intermediaries, who are not intermediating other people's transactions when they're not doing that, right? When they don't have custody and control over other people's money. So we're doing our best to educate members about how this tech actually works and the limits of what software developers are actually doing in reality. Overall, I think, there's three different ways that software developers get protected in this bill. There's the Section 601, as you mentioned, that's from securities laws. There's Section 207 from the Commodities Exchange Act. And then there's the BRCA, which protects software developers from being unfairly treated as money transmitters. So this bill, which I see is now up on the screen, is actually a House side bill. So we've been talking about the Senate and their ongoing market structure conversation, but this bill is a House Judiciary Committee bill led by Representatives Fitzgerald, Klein, and Lofgren. And this says that Section 1960, which is the criminal statute punishing people for running unlicensed money transmitting businesses, should be amended to make it clear that to even be talking about this section, you need to have control over currency, right? If you're going to be charged with a crime under Section 1960, you must have control over funds, which is how we've all been interpreting that statute this whole time. It's how the BSA talks about, the Bank Secrecy Act talks about money transmission, and this would make sure the criminal code is aligned with the Bank Secrecy Act. But this is a House side effort, and it is actually the same fix that used to be in the Senate market structure draft, the September draft, but was then taken out more recently.
Yeah. So Amanda, I want to get into the weeds a little bit on this because I think it is really important as one of those issues that's like kind of on the back burner while yield gets figured out. So I was on the Hill yesterday with BA, and I know you guys were involved there as well. talking to staff about some of the other issues that are more pertinent to DeFi. Like, it is kind of refreshing, I think, for staffers to not be talking about yields for a minute. But one of the concerns that I've heard is in the current Senate draft, the way it's worded, Dems are potentially concerned that it would reduce the ability of prosecutors to bring cases under 1960, which is kind of this, like, it's only been a handful of cases that have actually used this criminal code, as you mentioned. It doesn't seem, in like my personal view, to actually limit any sort of other criminal misconduct that could be associated with violation of the BSA or any other kind of AML or anti-fraud laws. Do you think there's anything that like Dems are kind of missing in the scope of what's in the current sort of Senate draft about sort of hamstringing prosecutors, with this kind of a provision?
Yeah, I want to be really clear, like, it's not a valid concern. It's just not. It does not take away prosecutors' tools. It does not say anything about any other part of the criminal code. So to the extent that somebody is actually laundering funds or engaging in a sanctions violation or doing anything else that you can think of that's a crime, this says nothing about any of those tools, right? This doesn't even change. The BRCA doesn't even change 1960. The BRCA simply says that money transmitting should be interpreted consistently across both the criminal code and the Bank Secrecy Act. I truly don't understand like how any lawyer could possibly make the argument that it's better for terms to not be treated consistently in two different places in the law, right? Like, it's so logical that we should want money transmission to mean the same thing everywhere it comes up in the US code. And of course, we want prosecutors to have tools to go after bad actors, and we would not be proponents of the BRCA if we thought that it actually did constrain prosecutors' abilities to go after illicit actors. It just doesn't do that. It's really a very narrow change to the interpretation of a term to align it with FinCEN guidance, to align it with Congress's previous intent or their intent all along. So all the other laws are still available to prosecutors. You can indict people or investigate people for money laundering. Doesn't change anything about that.
How important, Amanda, would you say the introduction of this bill? And I know it's only an introduction of a bill. I know it's in the House, it's not in the Senate, but do you think there's any maybe correlation between this introduction and sort of the push, the fact that it is a bipartisan bill around, with the negotiations that are happening in the Senate right now? I know Jacqueline mentioned, Mark Warner and Catherine Cortez Masto. They're sort of the Democrats that are a little bit, a little bit hesitant, maybe a little more than a little bit hesitant on the 1960 and software protection, software developer protection aspect of things. Do you see this having any positive impact on those discussions in the Senate right now?
I don't know if I think it's going to have a positive impact on those discussions. They won on this issue, right? Like, Dems wanted, or I should say people wanted, this fix to Section 1960 to be taken out of the developer protection section, which was previously Section 501, is now 601. And they won on this issue. They got that taken out in the most recent draft. So in my opinion, like, they got the concession that they wanted, and the RCA is doing something totally different. In the House side, I view this as a parallel effort, right? It really doesn't have anything to do with market structure at this moment in time, but this is a fix that we view as necessary, that I think the industry generally views as a necessary protection for software developers. So we're not going to stop trying to make it so that the criminal code makes sense with the Bank Secrecy Act just because it didn't end up in the latest version of market structure in the Senate side.
Yeah, on that point, are you worried at all that this could become the start of an argument to pull that language from market structure and try to pass as a standalone bill later? And like, what impact would that have on kind of market structure and certainty for developers?
So I don't think it should affect the Blockchain Regulatory Certainty Act at all, right? Like, certainly that should continue to be a separate thing. And they've already if you were to look at just the actual language in the House bill we're talking about, that language is already out of market structure. It's not there anymore. So I don't think it should have any further effect on market structure. I think the conversation still is just happening around the Blockchain Regulatory Certainty Act when we're talking about the Senate. And, that's a red line for us. That's going to continue to be a red line for us. I've heard many others in the industry say it's a red line for them as well. So there may be other ways to address concerns about illicit finance, right? There are other valid ways to make sure that people who are actually doing things wrong are able to be investigated, if that's what the government wants to do. I just don't think that the place to do that is the Blockchain Regulatory Certainty Act.
Gotcha. So you're saying the 1960 provisions in the Senate banking draft as it stands now is out?
Yeah, like this line edit that you see on the screen, this used to be in the Senate banking draft and it's not there anymore. Like it has already been taken out. So there's no debate over it at this moment. So it's just a House effort at this point.
Gotcha. Okay. All right. Anything else we should be watching, Amanda, that you're keeping a close eye on?
No, I think overall the discussions will continue. Of course, we're waiting for Senate Banking to announce their next markup date, which will be hopefully a time we get new text, right, to see what the actual status of the bill is. It's hard to react to the state of play without knowing what it says. So I think that everybody will be anxiously awaiting to see what the next draft looks like. And then it's we're waiting for the floor.
Amanda, I actually have a quick sort of practical question here. I know we're talking about legislative text. There's a lot of numbers and sections and it's confusing. But one of the things I deal with in my role, and I've talked to other GCs about this, is how much developers in the US are even kind of tracking this as a point. Can you just explain a little bit, because I know there's arguments about, taking devs offshore or going kind of backwards if we don't have this kind of developer protection and this uncertainty remains. Can you just explain, like, from a very practical sort of point of view, like, why does it matter to, software developers like sitting in, New York, like whether or not we get this done?
It's a great question. And it is important, even if you don't know the section numbers or you don't know exactly what the text is. If you're a developer, it's important to not feel like you have to worry that you're going to be charged with a crime that you didn't know you were committing and you didn't intend to commit, right? So like at the highest level, having certain laws is your due process right to know the law as it exists before it's used against you, right? And it is important for you to feel confident that you have an understanding of what that law means, especially in terms of your own conduct. So I think these bills, whether you know what's in them or you know what's going on in the market structure situation or not, are important to make it clearer for software developers to feel like they can build here without these negative outcomes, without even being served with a search warrant. Like, I used to be a criminal defense lawyer. I can tell you that even receiving a search warrant or a request for documents, we are already talking about tens of thousands of dollars just to have like baseline representation in that situation. And then if you're actually charged with a crime, I mean, it's hundreds of thousands to millions of dollars to make it through a case. So it is huge. And of course, like, that's the monetary effect. There's also like all the personal effects. So I think it's really a real fear for people. And hopefully these bills are going to make it so that people don't have to worry about those things going forward.
Makes sense. Well, Amanda, thank you so much for taking the time, and look forward to seeing this progress in the House and the Senate and wherever else it needs to progress. So thanks.
Nowhere else.
Yeah.
Amanda. So we could see you.
Thanks for having me on.
All right, Ellie, take us home.
Take us home. Well, to take us home, we have Collin McCune. He's the head of government affairs at Andreessen Horowitz, and he's here to give us an update on what's going on in those stablecoin yield talks, the Clarity Act, and a meeting on the Hill between Mark Andreessen himself and Chris Dixon. Collin, welcome to the show. It's his first time on Crypto in America. Welcome.
Hey guys, how are you? I know I feel like a first time caller, long time listener. Like old school radio show. This is great. I've been a huge fan for a long time.
Thank you.
I love that. Thank you. Chris Giancarlo said that when he came on the show. He said those exact words. He was like,
good.
Long time listener, first time caller, whatever it was. Yeah.
We are excited to have you. I think maybe start off on the point that Eleanor brought up. Can you kind of give us a rundown on what that conversation was like?
Yeah, I mean, look, let me just say from a high level, all of our meetings that I think we've had recently have been very, very positive. Everyone generally wants to get this thing done. There is a lot of fatigue in having conversations around market structure, which is usually a good sign that you're on the cusp of hopefully having a breakthrough. But the meeting specifically, and the Senate Republican lunch that they do, I think weekly, was really positive. Generally speaking, I mean, I think everyone has been very, very positive, especially on the Republican side, and wanting to get this thing done. There were a couple of really, really, I think, generally thoughtful questions on some of the outstanding items that I'm sure that many guests on your show have been talking about for at least the better part of the last 6 months, maybe since the existence of the show. But overall, I think the vibe was really, really positive, and I think the rest of the meetings we had were very, very positive too.
Nice. When it comes to stablecoin yield talks, I mean, that's been the talk of the town for the last month or so, right? But your general counsel, Miles Jennings, who is a friend of the show, we had him on a couple of weeks ago. He has been a key figure in those discussions at the White House. What can you tell us about where things stand on that? And I'll just give it a little preface by, like, my reporting earlier this week shows that basically both sides are sharing text at this point. There may or may not be some like big grand announcement from the White House saying like, okay, we've reached this aha moment and everybody's happy and we're going to move forward and everyone's going to be like best friends and go dance, right? But
that's right.
But there is text being shared, and right now I feel like both sides are still kind of maybe in discussions, and that's sort of the latest. Is that what you're hearing as well? Is that what Miles is saying?
Yeah, that's basically the general gist. Yeah, you're right. I'm, Miles is our representative in the room and in those negotiations, but obviously the spillover is beyond just what's happening in that room. And certainly the Congress is still at the table. The Senate, particularly the senators who have been mostly focused on this, which are Senator Tom Tillis and Senator Alston-Brooks, are obviously very engaged on this and want to get something done. Look, the way that I would characterize this is pretty much exactly the way that you've been reporting on it. So hat tip to you on good reporting. It is the idea that these two sides that have a difference of opinion on this are going to, hold hands and jump off and say this is the greatest thing that's ever been done is probably unrealistic. But what I would say is there seems to be some common ground based on what needs to be solved, right? Deposit plight has been something that has been very concerning for the banks. I think that there's a path forward to try and solve some of those concerns. On the crypto side, obviously, the Genius Act spoke on this issue, and rewards are the law of the land. They should continue to be the law of the land, and that's what we're fighting for. I think the Venn diagram is there, and there is a deal to be cut. And I think that what we have heard from the senators and that they've said publicly is we're not trying to make either side totally happy. And I think we are very, very close to that moment where both sides are not very happy. And that usually means that we're getting close to a deal.
Yeah, Collin, it's a great point. And I was kind of, laughing when Ellie was talking about us all just riding off in the sunset together, because it seems relatively unlikely. But I was talking to Senator Alston-Brooks a couple weeks ago, and she kind of made the exact same point, which is like, if everybody hates our version, then like maybe that is the best version, right? And so I think from like a procedural perspective, it seems like it's going to be impossible to kind of roll Senators Tillis and also Brooks through this process. They're obviously going to be involved and have a voice. But what I personally haven't heard a lot about is any concessions that the banking side has made here. Do you know anything about where there could possibly be movement on that side of things? Or are we just all going to end up kind of like relatively unhappy? Because I think as Patrick Witt, another friend of the show, is fond of saying, like, if we get nothing done, then you just have genius. So where do you think the banks are actually kind of willing to come to the table here, given that everybody is acknowledging that we're all going to be kind of relatively dissatisfied with whatever we get to as a finish line?
Yeah, let me give you two answers on that. I mean, like, the first thing here is let me sort of give the bank perspective, which is they don't believe that rewards should be able to exist at all. So if you're starting from that position, which we, obviously from a crypto perspective, believe that that's not a reasonable position, then everything that has been included in this negotiation is a give from their side. Now, I would say that if you're operating in what I think is reality, which is rewards should exist, and to your point, are already the law of the land, then I think we would certainly hope that the banks would come to the table with some more reasonable ideas soon. But look, like, again, the Venn diagram is there. I think if we're solving the problem, which is deposit flight, and we are also acknowledging that there are other industries that have rewards programs, crypto should not be limited by not having a rewards program, then there's a deal to be had. You know what I mean? I think a lot of the things that have been referenced in this certainly are other industries that have rewards programs that we can all think of, right? Everything from coffee to airlines to credit cards. So there should be a way to thread this needle.
Yeah, Collin, I'm curious. So there was a rule proposal that came out from the OCC this week that has caused some back and forth on Twitter over whether it's really going to restrict stablecoin rewards. And some people think yes, some people think no. It's just reiterating what's actually ingenious. What's your take on that? Is this a more restrictive stance on rewards from the OCC, or is this just codifying what's actually ingenious?
Yeah, I mean, look, my take on this is, this is going to be a very DC answer, but my take on this is an NPRM. This is it. I know. I'm sorry, but it's an NPRM. I mean, like, it's a notice of proposed rulemaking, which means that it's a notice to propose rulemaking. It is not a final rule. This is going to have to go through a very, very robust notice and comment period. It's going to have to go through APA standards. There's going to be thousands and thousands and thousands of people from all different sectors that are going to flood those inboxes over at the OCC with different information. And the reality is it's probably going to change fairly substantially from what we're looking at on paper. So look, the thing that I would say is, like, I think I'm generally encouraged, and I think we're generally encouraged that the OCC is taking this on and they're doing this quickly, because the quicker that we can kind of solve this and have the OCC at the table, I think the better off that we're going to be. But I will tell you that, look, in the negotiation that we're having right now, everyone is looking at the calendar. There's only a limited amount of time that we can get something done, and the OCC is not going to issue a final rule in that time. So to me, what's happening at the White House, what's happening with the banks, what's happening with the industry, and what's happening with the senators is the most important thing.
Yeah. Collin, to wrap the show with everything that we talked about with you, what is one message you would like to pass along to listeners that they should keep in mind as this convo progresses? And I think you have quite the optimistic outlook.
I do have an optimistic outlook. I mean, look, like, if you spend enough time in this game, you can decipher what is, I think, a real negotiation towards something that people want, and what is not. I would sort of leave you with this. This is my terrible analogy, but legislating is like big waves surfing. It is. You spend all of this time putting together the jet skis and the team and studying the areas and surfing the general sort of waves that are in your area. But at the end of the day, in order to surf a big wave, you have to have the right swells and you have to have the right weather. Mm-hmm. And right now, we have spent an incredible amount of time trying to put together the right team and waiting for the moment where the political winds are at our backs, and the political winds are at our backs, and this is the moment. If we miss this moment, then we're not going to get a bill, and then we will be at the whims of sort of regulators for the out years, and we don't know what the political opportunities and political situations will be in the future. So my optimism comes from the fact that I think that we've got the political soup to get this done.
Well, I hope you guys catch the wave, so to speak.
Yeah, me too. Yeah, sorry for a shitty analogy, but it is.
No, I love the analogy. Thank you again for coming on. We'll keep an eye on it for sure.
Thanks, Collin.
Thanks, guys.
Thank you, Collin.
See you. Bye.
All right, guys. Great show back.
Good to be back.
February. We're moving into March. Almost a year anniversary. Let's go.
Yes.
Ridiculous. And I want to say thoughts and prayers to everybody who's going to spend their weekend on that 200 pages from the OCC. All the custodians and issuers. I know you're going to have a long weekend, so good luck with that.
All right, guys. See you next Friday. Have a great weekend.
Thanks, guys.